Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of the Chicago soybean complex.
Hello and welcome. Before we start, I just want to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of these patterns, levels, analysis, or on any related items on these, my charts. This was all my own original work, as I think you deserve to have that. So with that, Chicago soybeans. I think it's fair to say that this commodity has been frustrating me for a while. It was only when I looked at my longer term monthly charts that was able to decipher a little of what had been going on and to give credit and warnings where they were due. So if we look at my longer term monthly chart, we can see that the action since as far back as the low seen in August last year till today has built a sideways action. Now, I noticed this action 32 weeks ago, and I will expand on that shortly, but I just wished you to see that this sideways action is not done yet. And as to whether it's a halfway hesitation lower or a basing action higher, that is still an open question. Back to my daily charts, and also 32 weeks ago, I highlighted a bright pink July 2024 to date rectangle pattern, which you can still see on my daily chart, currently 962.25 to 1103.25. This pattern is still operational, even now. We are now roughly midway between the pink upper trend line and the pink lower trend line. Near the pink lower trend line, we also have the unreconstructed 2019 to date uptrend. That's currently at 975.25. And these supports help to explain the hesitation seen over late July and early August before the market subsequently turned back up again. Now, there have been other patterns here, however, they are no longer valid. And the most recent pattern, or should I say possible pattern, even had been a pattern, is the mid-August to date head and shoulders top, which we formed the first shoulder and the head, sort of. And we're finished with the second shoulder, but it's not a great looking pattern, though I still give it some credit. What is important is that it's increasingly looking like a head and shoulders continuation pattern now. A short distance below the market, we had what was the overhead gold long moving average, currently at 1036.75, which had been support 2 weeks ago, then last week resistance, and now back again to being support. Close to this are the combination of the mauve medium moving average, currently 1029.5, and the green short medium moving average, currently 1036. Now, I still value the mauve medium moving average, but I'm not sure about the green short medium moving average. Meanwhile, looking closer to the market, we can see that the November 2020 low at 1045 is this week acting as a base. And to be honest, apart from the Fibonacci line at 1061, there doesn't seem to be that much overhead until the September high at 1072, so watch out. Chicago soybean meal. 28 weeks ago, I linked some of the early 2025 highs into a bright red, now broken, downtrend, currently at 266 even, though it is still valid in another form, which I will shortly explain. I also connected the lows at the time into a different purple broken lower trend line, currently 276.40, and together they made a January to August descending wedge pattern. This pattern was broken on the downside in late July, and in the process of breaking lower, the market made what looked like a small combined dark blue descending expanding wedge pattern, and at the same time a July to August reverse head and shoulders pattern. And that's currently the neckline for that is at 283.90 of this combined neckline and upper trend line for the descending expanding wedge pattern, as well as this bright red upper trend line. Now, the bright red upper trend line and the purple lower trend line, the short medium moving average currently at 282.20 and the medium moving average at 281, they're all acting as resistances and now as supports. Prices climbed higher and now entered a congestion zone formed between April and June 2020 and between 282 even to 300, and were eventually stopped in late August by the combination of the overhead gold long moving average, currently 291.80, and the 50% Fibonacci line for the whole of 2025 so far at 294.5. The rise did not manage to meet the primary target for any of the patterns, the reverse head and shoulders pattern or the descending expanding wedge pattern, and these have now been retired, these targets. However, all this activity saw a new pattern emerge, with the now broken but seemingly still valid bright red downtrend, the one I spoke about previously, acting now as a lower trend line in a mid-August to date, initially a bear channel, but now morphing into a descending wedge pattern with a bright new red mid-August to date downtrend. And that's currently at 277.80, acting as the upper trend line. Last week, the market broke up through this new bright red upper trend line, as well as the extension to the dark blue upper trend line of the previously mentioned expanding wedge pattern. And yesterday and today pushed up and tested both the significant lows from earlier this year, centered around 290.80, as well as now the flatlining gold long moving average, which is currently at 291.80. Question as to whether this attempt high is a false break or not now seems moot, as we have made a clear break higher from the bright red descending wedge pattern. This action now gives us a primary target X up in the 295 area and a secondary, harder to reach target X1 up in the 304.20 area. In the immediate way beyond the gold long moving average, we have the 50% Fibonacci line for the whole of 2025 so far, as well as the late August high at 295.40. Plus we are still within the old 282 to 300 congestion area. Finally, this commentary would not be complete without my discussing the elephant in the room, or at least the elephant in the room which has stayed there throughout 2024 and also resonates now into 2025, and that is the annual key reversal seen here at the end of 2023. I said, and I'm afraid I have to repeat something I've highlighted now for 124 weeks. Yes, well over 2 years now, and I quote, "I now only need to remind you once again of my words when I pointed out that Chicago soybean meal was about to have that rarest of patterns, an annual key reversal down. This duly came about at the end of 2023 and been living in the shadow of this pattern ever since," end of quote. I've also added ever since, and I quote, "If there's only one thing you take away from any of my musings, let it have been those words," end of quote. Well, the last few weeks have shown again that the shadow cast by the supremely significant pattern so long ago still darkens the skyline of this market today, despite last week and this week's move higher. Chicago soybean oil. In the past, and even now to a certain degree, the key pattern here had been the dark blue April to date ascending expanding wedge pattern, which is currently 54.82 to up off the top of my daily chart. However, and this is a crucial point to understand, it is not has been, it is also is the dark blue upper trend line, the one that disappears out of the top of my daily chart, along with the lower bright green lower trend line below, currently at 50.36. Those two together make a similar ascending wedge pattern. So currently it's 50.36 to off the top of my daily chart. Now, I still have a conundrum as to, do I regard the dark blue trend lines as a definitive ascending wedge pattern, now broken, or do I look at the bright green uptrend below as the real and true lower trend line for the ascending expanding wedge pattern? I now regard the green lower trend line as the real deal, and I will downgrade the dark blue broken lower trend line after this commentary. Now, since the peak of the market in late July, we have seen a new pattern emerge. Another wedge pattern, this time a descending expanding wedge pattern, highlighted in red, currently at bright red 44.07. Well, it should be bright red, but it doesn't come over very bright red. Currently 44.07 to 50.80, and this one is all coming to a cusp. You see the breathing space between the green lower uptrend line and the red downtrend line is becoming extremely constricted, such that by the end of this week it will have all but disappeared. Thus, we have a cusp, and something will have to give way, and soon. At the same time all this is happening, we have other forces working on the market, notably the overhead green short medium moving average, which is pressing down, currently at 51.45, and it'd be interesting to see what happens to that today. And above that, the now disinterested mauve medium moving average, currently at 52.31. Then below, Not tested as yet, but certainly influencing the market, is the rising gold long moving average, currently at 49.42. It all makes for some potentially quite exciting and dangerous prospects for the immediate future.
Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.